What's up guys, this is Chris with 10K Trades, and today we are going to go over a trick used by the most powerful investors in the world to make sure that they get the best price for their investments. This is a brand new YouTube channel, so please like this video and subscribe to the channel, and go ahead and comment what you want to see in future videos, as there will be much more content coming out in the future. Now obviously the most basic concept of investing is to buy low and sell high. Buy low, sell high. Buy low, sell high. And obviously with any investment, we want to have the best possible returns. So this usually means to buy at the lowest price possible. But then the big question obviously is, how do we know that the current price is the best price to buy? So now the secret tool that these big banks and hedge funds use is something called dollar cost averaging. Now with any long-term investment, you want to reduce your risk as much as possible while keeping the opportunity for the best possible returns. And this is exactly what dollar cost averaging does. So now to explain dollar cost averaging, let's use an example. So let's say you want to invest $1,000. Now you can just pick the current price and throw your $1,000 in and hope that that is the best price. But I mean, obviously that's really risky. Like, you could throw it in and it seems like a good price right now, then tomorrow it drops off and now you just lost all your money. So the key here is to reduce the risk of your investment. So what we're going to do with dollar cost averaging is we're going to take that initial $1,000 and we're going to break it up into 5 parts of $200. So then what we're going to do is we're going to invest $200 each month for a total 5-month period. So the current price of the asset that you're going to buy, right now it is priced at $50. So then you're going to put the $200 in and buy it at the $50 price. Then the next month comes along. So the next month it goes a little bit down and now it's priced at $48. Okay, so then you put another $200 into that. Then month 3 comes along and it is priced at $47. So same thing, take the $200, put it at $47. Then month 4, it goes up in price and now it's priced at $51. Same thing, take the 200, throw it in. And last, month 5, it goes up again, priced at $52. Same thing, take that 200, throw it in. Now you've invested the full $1,000. Now when we average out all of the prices that we bought the asset at for the full $1,000 over the 5-month period, the average comes out to $49.60. This means that it is 40 cents less per share over the entire investment, rather than if you just put the $1,000 in on month 1. Now you can use dollar cost averaging to buy over periods of months, weeks, days, and even some of the biggest investment firms use this strategy to buy shares by the minute. Now this strategy is especially useful in a very volatile market like we're seeing with cryptocurrencies. So if we're looking at one right now I have a Bitcoin in the last month. If you see, there's so many different peaks and valleys that are happening every day and every week. So if you were to do something like dollar cost average on the weekly basis, you can find some of these lower dips in order to put prices in and not freak out when it just goes up to a big high and then drops down again. So when you invest in on a weekly basis, dollar cost averaging on a weekly basis, then you're going to see much more gains in the long term. Because obviously, like we said from the beginning, these are long-term investment strategies. So I think doing something like this can work on all different cryptocurrencies. Obviously, we're just looking at Bitcoin as an example. Now, this is a strategy that I personally use when I make investments. And honestly, it just kind of makes you feel a little bit more in control as you're making the investments. And even though obviously you never know what's going to happen with the market, it just seems like you have a little bit more control of where your investments are going. And it doesn't just seem like it's a prayer, just throwing in your money and hopefully it's going to go up. So now talking about the benefits and the risks, obviously some major benefits is that it kind of takes a lot of stress off you personally when you're just trying to find that perfect time to invest. This just allows you to put money in and feel more confident and safe as you're putting in investments. And especially in volatile markets like we saw with Bitcoin, there are a lot of ups and a lot of downs. So I think using a strategy like dollar cost averaging really will help you out in the long term. Now, on the other hand, there are some risks as well. Obviously, dollar cost averaging does not ensure that everything is going to be perfect or ensure that you're going to get the better price. Obviously, on a less volatile market, like for instance, if we're looking at an ETF, which has a steady climb, a steady increase, obviously, if you just put it in at the beginning and just watch it go up, it's going to be the best. Dollar cost averaging isn't always going to give you the best price. So with that, long story short, if you're looking at more of a volatile market, I think dollar cost averaging is a great strategy to use. But if you're just looking for basic, steady increases in the long term, not very volatile, then I think just putting in a lump sum at the beginning is probably your best bet. Now, ultimately, I think dollar cost averaging is a strategy that everyone should at least know about, especially if you're into investing. Now, I am not a financial advisor, so anything that I say, do not take it for word. That doesn't mean that you need to go out there and do anything. I'm just telling you based on my own personal experiences and research. And ultimately, while there is a lot of risk in investing, period, the main thing is just to be informed. So learning a thing like dollar cost averaging, I think, could help you make more of an informed decision, and that's all that matters. Now, if you made it through the entire video and learned more about dollar cost averaging, please like this video and subscribe to the channel. This is a brand new channel, like I said before. There will be a lot more content coming out. I really appreciate the support, and this is Chris with 10K Trades.